Hey everybody, how is it going? Welcome back to the channel and to another stock market update. Well, this chart that you see in front of you is a chart that I came across today. I thought it was rather interesting, so I figured I would share it with you guys. What this chart is showing us is that as far as the S&P 500 in real terms, this is the worst year since 1872. Now, I know the year isn't over yet, so you don't know where this is going to end up at, but that is going back a very long time, and this data is showing the S&P 500 annual total returns in real terms, going back all the way to 1900. So just some pretty interesting data here. This is where we are right now. And I think the S&P 500 didn't come about until the 1962, or at least the early 1960s. So I don't know if this is just showing the 500 biggest companies going all the way back to 1900, but we're not going to nitpick the data here. Let's get to the most important part, and that is just showing us how far we are down in real terms, compared to some of the historically worst years going back more than 100 years. And if you use, say, 30% right here, I know this isn't a perfect line here, but 30% down as a threshold, you can see pretty much every year after that was just a fantastic year for the market. So if you can hold your nose and actually buy while these things are crashing, you get rewarded handsomely in the next 12 to 18 months or so if you hold that long. But the first one I want to show is the panic of 1907. You can see the following year it had a return of right around 50%. So if you were fortunate enough to buy any stock anywhere near the bottom of the panic of 1907 and held on to it for 12 months or so, you had an unbelievable return. The next time it happened was during WWI, or World War I. You can see that that made it down to about a negative 42%, give or take, which is just a little bit lower, I should say higher of a return than we have going on at the moment. The following year looked like it was up about 5 or 6%. So if you're fortunate enough to buy any stock near that bottom, you had a pretty nice return the next year as well. Next time it happened was during the start of the Great Depression. And the following year had a tiny up year, but the year after that actually had a very nice up year. So you were able to, really hold your nose and buy during the crash of 1929. The next couple of years, you were rewarded nicely. And then, of course, there was another terrible year at the end of the 1930s, which was followed by a very nice following year of a return in the positive 30% area. So very nice return off of that bottom. But you have to go all the way back to the oil shock of the early 70s before it happened again. And then the following year, you can see there was a return right around 25%. So very nice return the following year as well. Looking forward a little bit, you can see the next time it happened was during the Great Financial Crisis of 2007, 2008, and the following year had a nice positive return of right around 20%. So very good buying opportunity there as well. And again, this is where we are in the chart. So odds favor, we're probably going to have one of these type years. Who knows, maybe even one of these type years the following year. So, just another chart that's showing, even though the market is performing terribly, this is a pretty decent time to actually be buying a stock. And actually, when I see a chart like this, the thought that goes through my head is this could be a very, a generational buying opportunity to buy for, some leap call options. I mean, that's what I'm thinking for my portfolio. Buy some calls that are, out of the money, that have a couple of years left on them. Hopefully get a pretty good price on them and just hold. I'm thinking, buy 8 or 10 of these companies, and if 1 or 2 of them end up hitting and just having a unbelievable, return, that's going to be, multiplied by the fact that I'm going to be buying some options. not the strategy for everybody, but this is just what I'm thinking. I'm not thinking about betting the farm, but taking some halfway decent sized position in some call options in 8 or 10 companies, and if a couple of them pay off, this could be a unbelievable opportunity for some real big asymmetric gains. All right, so let's get into these market charts now. We're going to start off with the QQQ, or the NASDAQ, like I always do. But the big news today, I'm not going to get into an article, but it was just the CPI that was being released at 8:30 Eastern Standard Time this morning. And of course, the number was bad and the market gapped down. In case you didn't see it, the CPI was supposed to come in up about 1.1%. Ended up coming in about 1.3%. to an annual year-over-year rate of 9.1%. So just crazy high, up over 9%. And man, I expected it actually to come in below the 1.1%. So I was a little shocked when we had this gap down early on in the pre-market, and then I saw that the futures were starting to get bought up as we got closer to the open. And my instinct was just to buy some TQQQ call options. I didn't get filled on them yesterday, but man, I just thought I should grab them right at the open, and for whatever reason, I decided against it, and that would have been the correct play, because you can see we had this gap down, and it was just bought up the entire time. And then later in the day, I actually considered taking a short trade as soon as it got up to the 8-period exponential moving average. I thought against taking that trade as well, and you can see the market reversed from that area, so that would have been a good trade as well, but I was too scared, too much of a chicken to take either one of them, so I guess that doesn't mean anything if you spot a trade coming and you're too big of a chicken to actually take it. But I didn't make any other trades today. I sent in a little bit of money to my M1 account to make some purchases, but as far as trades, I didn't make any trades today. It was a boring day, but looking at the NASDAQ, you can see it came right down to that trend line and had a nice reversal. So as far as I'm concerned, the uptrend is still very much intact. And when I say uptrend, I just mean these last couple of weeks. Obviously, we're in a big, nasty downtrend at the moment. This is just a uptrend counter rally at the moment, but I don't know. I'm optimistic that we're going to be able to push past this 50-period simple moving average, or this resistance area right around 296 on the QQQ. With that inflation rate coming in a little worse than expected, we had all the reasons in the world to sell off big time, but it was actually attracted buyers. Buyers stepped in and bought it up. So I am optimistic. I probably should have taken some or bought some call options on the TQQQ, but I'm going to sit back and wait one more day to see how this price action is digested. A lot of these big institutional players, when some big news comes out or earnings are released, a lot of them don't make moves that very first day. Some of them, really digest the numbers overnight, and they end up making their real plays the next day. So that's what I'm kind of waiting for, to see how the market reacts to those numbers the following day. If we got some buying pressure tomorrow, I might have to take some longs, because I think this could be the start of that summer rally that I keep talking about. But jump over, take a look at the spider, or the S&P 500. You can see the S&P 500, same thing. Wasn't as strong as the NASDAQ, but it didn't break that support level right around 373, and that's the line in the sand that I was watching, that I was hoping the SPY was going to stay above, and at least for one more day, it stayed above it. Let's take a look at the diamonds, or the Dow Jones Industrial Average. Same exact thing. Kind of gapped down and then was bought up a little bit and then sold off a little near the close, but held above this important support area right around 304.50. That's the area that I'm watching on the diamonds. And if you look at the IWM, you can see IWM was very strong, stronger than the spider and the Dow Jones, so that is a very good sign. Held that trend line, so we're still in good shape. Need some more follow through to the upside from this morning reversal in order to build some decent momentum. But I'm optimistic the IWM can make it. And then let's take a look at the USO. You can see oil had a little bit of a doji day. So after a doji day, after a significant move, either up or down, and then you have a doji, you usually wait for that next day to see where the market ends up going. Because usually when the market has a significant move, then a doji, and then a breakout of that range, it usually ends up following through for at least a couple of days. So that's what I'm looking for on the USO. Now I'm guessing the move is probably going to be a breakdown, or we're going to start heading towards that 200 period simple moving average. But let me get to a couple of charts that I like before I end the video. The first one I like is Rocket Mortgages, RKT, or Rocket Companies. This one is forming a very nice little consolidation after the gap up. I was super close to buying some call options in Rocket Company because I do think, if we get a break above this area at 885, there is a good possibility this thing could rocket higher. So I'm really liking this chart, waiting for a breakout. As you can see, the consolidation is moving sideways, but the moving average divergence indicator is continuing to rise sharply. So momentum is really starting to build in RKT. And the last one I want to show you is DNA. This one has been trying to carve out a bottom over the last couple of months, and that is saying a lot because the market has been very weak over these last couple of months, but DNA is just kind of going sideways. But had a nice reversal off of this support area right around 225, made a new pivot high right here, and we've had a nice little pullback with a nice green candle. So this is one that I am watching closely, and if we get a break above that 345 area, might end up taking a position in DNA, and I also might end up taking a position in DNA if we just get a little bit more sideways action where it holds above that 8-period exponential moving average. I think that could be a nice consolidation day before the move up. So that's what I am looking for in DNA. But if you guys see anything interesting in the market, or if you have anything to add to anything that I said today, please let me know in the comment section. I didn't check my last video, but I didn't get any notifications for any comments. Not even the fucking bots made a comment on my video. I guess even the fucking bots had something better to do. So, leave me a comment there. Don't leave me here talking about myself. If you see anything interesting in the market, please let me know down there in the comment section. Well, I'm going to end it right here. Thank you so much for watching this all the way to the end. And bots, if you're listening, take care.